Time now for our Futures in Focus segment. Oil headed for its biggest weekly drop in 4 weeks as U.S. supply data signaled that OPEC's efforts to rebalance the market need more time. Joining us from the CME to discuss is Brian Battle of Performance Trust Capital Partners. Brian, Wall Street also saying today that it was going to take more than 9 months for this market to rebalance. All of the major banks, as far as I can tell, are saying this.
That's exactly right, Vonnie. You know, oil is a global commodity, and there's supply and there's demand, and that's what drives it. And every story this week was about supply. OPEC, underreported. You saw the Saudis and the Russians meeting in St. Petersburg talking about oil. So that's a big non-OPEC member trying to figure out if they can cooperate and manage oil prices. But 2 other stories about supply, way bigger. First is Bakken shale is starting to flow through the oil pipeline that the previous administration started to block. So we're going to get oil coming out of the fracking fields in the Dakotas down to Texas. So more supply delivered to the port cheaper. And secondarily, the Interior Secretary started signing text that says, let's start exploring for oil in Alaska again. Those are 2 long-term macro supply trends that are not supportive for the price of oil. So we've been about 50 for the past 2 years. That might seem like the high water mark.
Are you saying that those kinds of projects could actually have an impact on the price of oil in the very near term, whether it's Brent or WTI?
So in the near term, kind of, it's more constructive. People can see down the pike that there's not going to be any sort of supply disruption and that U.S. oil will continue to flow. It's way more of a macro supply story. The demand side is not good at all, and the bond market is telling you that they don't think there's growth, they don't think there's inflation, and they're not sure that there's this global recovery going on because bond prices are rallying at 280 30-year. So the demand side doesn't look great, and there's plenty of supply.
So Brian, is the market anticipating a grind lower, or will this be more sort of the bottom falls out of the price at some point?
So I think it's going to be a grind lower. If you saw they're in St. Petersburg, as I described, and the economic minister from Russia said, we're ready for $40 a barrel forever. So they sort of put this, I don't know if that's a cap or a floor, but that's a pretty bold statement. So the Russians think 40 is okay, and they have the ability to affect that price. So the Saudis have sort of tied themselves up here by trying to limit supply. U.S. suppliers have just rushed in the past 2 years and filled all that in. So we have a stasis of supply, certainly domestic U.S. supply. Now, what might interrupt that is public policy. Is there going to be an import tax? Will Trump tax imported oil? Everything changes when you get a policy change, but supply and demand is supportive for lower prices.